The S&P 500 is forming a bearish divergence on the daily time frame. We are also very far away from the 20 EMA line, and whenever we do get far away from the white 20 EMA line here, we pull back to retest the 20 EMA line, collect the liquidity, and then move back up. Given that we placed a doji candle for today's closing session, that is a confluence with exhausting momentum, the bearish divergence, and being very far away from the 20 EMA line. Like I said, whenever we do see that, price action tends to go into aggressive correction mode. And I can show you the historical data when we do get around that distance from the 20 EMA line. So the way that I use my 200 SMA line and 20 EMA line is I use the 200 SMA as a trend guide. Okay, so I look at it as, all right, this is what trend we're currently in, whether it be a downtrend, whether it be an uptrend. And I also use it as a measurement for just how far we are from the home base and how close we are to the home base. So whenever we get very far away from the home base, price action tends to consolidate for a long time and create that wiggle room, and sometimes even collect liquidity to try and get another trend going. So in this case, that was a major market correction from the tariff wars, the tariff announcements or Liberation Day, that really took us to the bear market threshold, which was quite wild, to say the very least. But if you notice, unhealthy looking trends, whenever we do get far away from the 20 EMA line, we always find a way to somehow correct back down in a corrective wave, and then get another impulsive wave going where we place new highs above the prior historic all-time highs. So let's talk about the distance from the 20 EMA line. You can see right here, we started forming dojis, and when we started forming dojis, we saw a lot of these choppy sessions ahead. So for about 2 weeks, we saw the market just being very choppy. Very similarly to that doji right there. We did see some downside, but the issue comes from knowing that the market is going to be digesting, and that makes all the differences, especially if you're a SPY trader. If you trade during those digestive markets, you're looking at sessions where you're going to get theta crushed for the entire day, where they will be killing both sides. So again, we can see whenever we get too far away from the 20 EMA line, we somehow, some way find our way to correct to the 20 EMA line every single time. So this is not any different from any other times. This is another doji. Two overbought from the 20 EMA. We come back to the 20 EMA and then see another expansion. So this is looking the same here. The setup looks very similar. So for this reason, I'll be very careful going into tomorrow's trading session, and I will be taking advantage of any break below 645.05. If we get below 645.05, my next level to trade the intraday breakdown is going to be 642.4. So draw these levels for tomorrow's session, and once we do get below that, you have a lot of freedom and a lot of momentum on your side to try and catch the downside towards the 20 EMA line. Now, another reason to be cautious about the current market conditions is QQQ entering or QQQ finally seeing some selling. Here we are. QQQ is also forming that bearish divergence, and like I said, the bearish divergences are usually quite bearish, as you could tell from the name, because you got relative strength index declining while price is still going higher. So to show you what the bearish divergence looks like, this is an example of a bullish divergence. This is the opposite of a bearish divergence. So a bullish divergence, vice versa, works in the same way, and it looks bearish. It does look like we're going to see some pullback from QQQ. The tech-driven ETF, and a pullback on NASDAQ as well, non-financials. If you look at the overall market, XLB, which is the materials, was really leading today's session, up almost 2%. We had XLV, which was expected. We had talked about a rotation coming into XLV on Sunday's meeting, and we got into some stocks like UNH, some other healthcare stocks also. XLY, consumer discretionaries, this one was really leading today's session, as we can see. And XLK, for XLK as well as utilities, was down for the rest of the session, but just about the last minute turned positive and saw a little bit of green, as we can see, just 0.04%. Now, in the after hours, it is down again, and it is red, I would say, for the session. We will see how tomorrow goes, but so far, the XLK QQQ does not look bullish. I think there's going to be an outflow. There's a lot of stocks that are looking very, very overbought. And if the if the chip industry does start to pull back, there's a great chance that we're going to see a broader correction on QQQ. But yeah, that's my thoughts on SPY and QQQ for today's daily price action show. I think tomorrow is going to be bearish. So if you shorted today and made some nice profits at the top, off of that smart money exit, there's a good chance that we will be able to catch another move heading into tomorrow's trading session off of QQQ weakness as well as SPY weakness. Now, the leaders are DIA. If you notice, Dow Jones Industrials, this sector, sorry, this ETF is really starting to break out. We have all the fuel needed in the world, so the fuel is great. The volume is really starting to stack up with the RSI at a great level, showing a lot of room to the upside. So if I do see something like that with how the bearish divergence on DIA failed in this failed breakdown, if I do see something like that on QQQ and SPY, then I'm going to start trading those two. But for now, I think the momentum is going to be within DIA. And here are the stocks on DIA. We got GS, Microsoft, Caterpillar, industrials have been very, very strong. HD, V, AXP, McDonald's, JPM, AMG, all of these stocks. Apple has been doing really well. So these stocks are looking to drive the Dow Jones Industrials average higher. And if we take a look at IWM, that's another ETF which is representing the small caps that is very, very bullish. And you can tell why this particular ETF is bullish, because when we move into a lower rate economy, small caps tend to do really, really well. And given that we had President Trump saying that rates should really be lower, he's been urging rates to be cut. And we also had Besson saying that we should be 1.75 points lower. So yeah, it definitely looks like we are shifting towards a lower rate economy. And if we add the concerning jobs data recently, that'll also add um, um, more pressure on the Fed to cut rates. But yeah, team, I'm personally, I'm from this doji, like I showed you from the examples, I am anticipating some pullback or cooling off where price action just goes sideways. Um, and on QQQ, there might even be a chance of pullback tomorrow. So make sure you keep your eyes out on QQQ. You do not trade the longs. Your focus is going to be on the shorts because we need to correct. So yeah, that's all for today's daily price action analysis. I hope you have a great rest of the day. See you in tomorrow's trading session. I hope you bank tomorrow.